Good morning, everybody. Good morning. So I know I'm supposed to talk about business valuation, but no, I just don't want to talk about that. I think because it's really not accurate as far as what this is. And but before I get into why this really isn't a talk about business valuation, it kind of is, but it kind of isn't. There's a guy that I read his blog pretty much every day. His name is Seth Godin. And anybody heard of Seth? Oh, a lot of people. Okay. And you know, as much chaos as the social media companies have caused, Twitter and Facebook and all this noise and all this advertising we talked about yesterday, that makes direct marketing harder and harder for small business people, they have identified a few very interesting things. And one of the things they've taught us in an unbelievably interesting way, because of so much volume, is they've taught us a lot about human psychology. And one of the things that Seth wrote a blog about was why people share ideas. Why do videos go viral? Some do, some don't. You know, why does the little cat that fights off the alligator, you know, why does it have 47 million hits? And the reason I'm talking about this is again, yesterday we talked about documents on a disk as a way to go to advisors and get them to engage with you to develop joint work with their clients as a way to strategically develop new business. So what I want to talk to you about is how can we get existing clients to happily introduce us to their friends that also own businesses or also high net worth clients. If we could figure that out, that'd be a really big deal. And you know, when you think about it, why do people refer people to planners? And the answer is they're typically going to refer their friends. Their friends may own a $100 million company, but they're still friends. They're not going to refer acquaintances. And one of the things that Seth was talking about, that the social Facebook and Twitter and LinkedIn, what it's taught us is there are some very specific reasons why people share ideas with their friends. And I want to read you the first three reasons. I refer my friends to you because it makes me feel generous. I refer my friends to you because I feel smart alerting others to what I've discovered. I refer my friends to you because I care about someone and this idea will make them happier or healthier. Nowhere in there was because I'm feeling guilty and the guy that sold me the policy said that's kind of how he makes his earnings and he'd like to list 3 people that I know and that's sort of how he grows his business. I'm not his unpaid sales rep. So if we could figure out a way where people wanted to refer their friends to you because of these 3 reasons, that'd be a really big deal. And I think we've got that figured out. What I'm going to show you today, I think, is unbelievably powerful in terms of the service that you can offer business clients, where they are going to be so incredibly impressed with what this can do for their business that they're going to want to go to their friends who own businesses and introduce this concept to them with you. So we are going to talk about business valuation, but just to tell you a quick story, I was involved with a company over the last 10 years, and we got to a point where we needed to figure out what the business was worth. And so, you know, this was just a year ago, and so we didn't know, what to do, and we found a local guy who was a business appraiser. We went through a process, and it took a couple weeks, cost about $10,000. We got his 25-page report, it was a difficult, frustrating process. The guy that was the appraiser, I can't really tell you why I didn't like him, but I didn't like him. He was kind of difficult to talk to and very, and again, it was a $10,000 business appraisal. One time. What the guys at BizEquity have done is they've created a cloud-based platform where instead of, and you know, business appraisals, depending on the size, would be $7,000, $10,000, $15,000. You can now get a business appraisal for $365. And more importantly, it's better than the one the local guy does. And the reason it is because they've built their database on the cloud so that it accesses more comp data, more historical other business sales. So they're actually going to get you more accurate valuations than the $10,000 guy. But here's the most important thing. If I go, when we went and got our business valuation, we got a valuation for a moment in time. And that was $10,000. And so that's exactly what it was. It was the value of our business at that moment, and that's it. What the $365 gets you with BizEquity is it gets you a year subscription with that business. You can run a valuation every day on that business, and it's a year subscription. So what they've done is they've converted business valuation into management consulting and strategic planning. Because when's the best time to value your business? When you're ready to sell it? When's the best time? 5 years before you're ready to sell it, because when you do the valuation, as we're going to see in a minute, we'll get to the technical part. That's the easy part. The concept of this is the most important part. When you do a business valuation, the way they've designed it, you can see, I think there's, Mike, how many different metrics are there, key performance indicators are there
in the report at the end, Don?
Yeah.
We do over 30 different key performance indicators.
And this, Mike Carter.
Comparing the company across to 17 million other businesses at the end, besides the valuation report.
And that's Mike Carter, president of BizEquity. So the point is that when we go through this case, and we will, and we go through all of the key performance indicators, for example, let's say that your top three customers represent 80% of your total sales. Well, you can say, well, what if it only represented 50% of my total sales? All of a sudden, my value goes from $3.5 million to $4 million. So what this does, because it's a cloud-based solution, is it gives you the ability to work with the client, do the valuation very inexpensively, and then give them, or let them, working with the system, get great ideas about how to build their business and see real time how that would impact the value if they implemented those changes. So let's just take a second, and I want to run you through. One of the things that I've been asked a lot is, well, why should we trust this valuation? And I just want to go through a couple things about, and the relationship between InsMark and BizEquity. We've created a InsMark Business Valuator, which is our private label platform powered by BizEquity. And this is, I'm going to kind of take you through a couple things. Okay. And hey, Richard, I'm not able to advance the, there we go. What's the single most important question every business owner should know? Business valuation is the heart of investment and risk management. Without it, you're a blind. Warren Buffett. And see, this is what he's talking about. He's not talking about a valuation when you're ready to sell one time. He's talking about ongoing valuation and understanding how to modify the business to maximize the value of the company. There are 250 million small businesses globally, with 30 million small businesses in the US alone. 75% of US small businesses do not know what they're worth. And it's no wonder. We were in business 8 years before we did a business valuation. And our company was worth $1.5 million, but we didn't do a valuation the whole time we were running the business, only we were getting ready to sell it. So 75% of businesses are in the same boat. They have no idea what they're worth. It's too expensive, and they're only getting a valuation for one point in time. So it's really, all these business owners are conditioned to only do a valuation at the time they're ready to sell. 50% of small businesses are uninsured, or underinsured. So if we do a valuation, if you have a house and you think the house is worth $100,000 and it's really worth $1 million, are you going to manage risk correctly? Of course not. And so if you don't know your true value, then it's kind of hard to know how to use insurance products to manage risk. 7.7 million businesses will change hands over the next 10 years, representing over $10 trillion in value. The SBA cited valuation as one of the top 2 challenges facing small business owners. Now, let's talk about who BizEquity is. What's the credibility behind this platform? The chairman is Clarence Davis. He's a former chairman of the AICPA. Pete Musser, one of the early investors in Novell and Comcast. Admiral Tom Lynch. We've got several people from Intuit, Dun & Bradstreet. USA Today, check out BizEquity.com. The simple 7-step process on this site is a great tool. Colliers, BizEquity is democratizing data for the small business market. We've got Dun & Bradstreet, Intuit, PNC, and InfoGroup. All have vetted the system. Here's Experian. We created a small business marketplace online to help develop awareness that we are more than a data company. We chose BizEquity as one of the 2 partners in this initiative. We were very pleased with their product and service to us. So here's the key point. What BizEquity is doing with this cloud-based technology is the same thing Zillow has done with home appraisal. They're completely changing the way that business appraisal can be used by small business. If you're a $100 million company, there's no issue spending $100,000 on appraisals every 3 or 4 years when you have your auditors in. But for all of the small businesses, for all the businesses under 10 million in value, there's this massive opportunity to introduce a totally new platform that makes it affordable for them to be able to use business valuation as a management tool. Not just gee, I'm getting divorced, we need to figure it out under pressure. Now let me ask you this, and this is where the opportunity for everybody in this room is. If we had 100 business owners in this room, how many of them over the next 5 years are going to figure this out and go to BizEquity.com and sign up and value their business? Not very many. And the reason is because they're conditioned to think, I get a business valuation when I'm ready to sell my business. That's what most of them think. So does it make sense that they need somebody to introduce this to them and coach them on this and explain to them how crucial this is in terms of the decisions they make in growing their business moving forward? It's absolutely a crucial management device. It's just been too expensive before. It's just not practical. Now it's $365 for a year. And who better than financial professionals to coach these business owners about this new platform? So the only issue with that is if you're the second person. Let's say you have 10 clients right now that all own businesses, and you've had those clients for a long time. If you're the second person to introduce this concept to them, what's it worth? Very little. In fact, somebody else told me about this. Why are you only telling me about this now? I don't understand. You're supposed to be looking out for me. So one of the things that's crucial is you've got to be the first one to introduce this new platform. You've got to be the first one to coach them and educate them about this. One thing that I think is really interesting about the system, and I'd like to take you over to the system and kind of show you how it works, but it is unbelievably simple. Basically what you need is you need 3 years of balance sheet and 3 years income statement. And then it's essentially finished. Hey, Richard, how do I get to the internet from here? What's the... Sorry? Okay, so use the mouse. Let me just... And you want me to use Explorer? Firefox. Okay. Okay, so I'm at InsMark.com, and you'll notice one of the sliders here is the new InsMark Business Valuator, which is, and by the way, you can either get valuations from us on our platform, or you can set up your own private label platform. If you have a group of agents that you want to introduce this concept to and you want to do the same thing that we've done, then talk to us about it and we can set up your own business valuation platform. So here's our private label, InsMark Business Valuator, powered by BizEquity. which again, you can either do your valuations through our platform or set up your own private label platform if you have a group. So what I'm going to do is go in and put in my email address. Now, I've already put a case in here, so I'm going to put in my email, and I'm going to show you how easy this is. Because, it's funny, by putting all the comp data on the cloud, they've made the actual process of doing valuations very simple. And I'll show you. Okay. All right. I'm going to put in my password. It's right here somewhere. Okay. Okay. So I've got Acme Ford, and I'm just going to take you through the screens. So the first thing it asks you for is the basic information, and there's 7 screens. So the basic info is client name, and then you continue, so that's pretty easy. Acme Ford. Let me go back one. Acme Ford, and then it asks you what industry they're in. So if they're a promotional products company, it's going to be valued with different multiples than if it's a car dealership. In this case, car dealership. So now we're going to go, so we're done with 1 of 8 screens. Now we're going to go to the business, George and Marie Grove, so on. Now this is kind of an interesting screen. Look at this, everybody. Very important for this group. Please select your reasons for running a valuation. Seeking equity funding, debt funding, estate planning, looking to sell my business, buy a business, insurance and risk planning, accounting, 409 valuation, just curious. Okay, next screen. Now we're looking for income and expenses. Again, you'll get this right off the income statement. So we're looking for revenue, basically in 2013, this year, last year, 2011, pre-tax income, officer compensation, interest expense, non-cash expenses. And it's kind of nice over here, they give you some help notes as far as what they're looking for. One-time non-operating losses, one-time non-operating gains. So does that intimidate anybody? I mean, that's pretty simple. That's right off the income statement. All right, okay to move forward? Am I going too fast? Okay. That's a key part of this, is it's also easy for clients to digest. So let's go to assets right off the balance sheet. Cash, accounts receivable, inventory, current assets, fixed assets, intangible assets. Okay to move forward? Okay. We're almost done. Liabilities. Accounts payable, other short-term liabilities, long-term debt, contingent liabilities, right off of the balance sheet. Save and continue. Okay, we're basically done with the hard part. Now there's just some projected growth rate, long-term EBITDA margin, which is basically asking, what's the long-term cash flow of the business divided by top-line revenue, and what's the guess on that going forward. And then we have percent of business that's recurring, very big number. Obviously, the higher the recurring, the higher the valuation. Do you have intellectual property, including trademarks, patents? Let's say yes, save and continue. And then what percentage of sales come from your top 3 customers? What percentage of your business is conducted online? If the owner of the business left, how would your profits and revenues be impacted? Does your current life or key person insurance coverage and risk management program cover the business valuation quotation above? Yes or no? That's it. This then, if you click download, it downloads a 28-page report, and BizEquity has a booth here, and you can go by and look at this report. But the 28-page report that they produce is better than the one I paid 10 grand for. It was also interesting because the valuation that the guy in Boise gave it was an import promotional products company, was $1,447,000, and BizEquity's was, I think, $1,512,000. And I was asking Mike why they were off by 30 grand. And my point is that they're right on. So why would you pay 10 grand when you can pay $365 for a year of these? It's completely changing the way this is going to work. And I said to Mike yesterday, if I were starting an agency, this would be the #1 thing I would be doing to keep my current business clients with me and buying more products, and how I would then get them to want to introduce their friends to this service. And I would provide this service at no charge to my business clients. One of the things that we're gonna, and again, any price that you have at BizEquity.com, if you use the promo code InsMark, you always get 5% off on our platform. So instead of $365 for valuation, it would be $347 or whatever it is. But then Mike and I were also talking, and I said, you know, Mike, we ought to do something where we can get the price down to where it makes sense to provide this at no charge to the business owner. So what we're offering is, and it's not just here, it's going to be ongoing, but for $3,000 less than 5%, you get 20 valuations. So that's instead of $365, it's $150 evaluation, which is dinner with your client once and his wife. So for $3,000, you get 20 evaluations, 20 companies that you can load up on the system. And that way you can go to your 20 best business clients, say, you know, there is something that we're very involved in. We think it's super important to you. It's something we now are providing to all of our business clients. We'd like to come over and show it to you. It will help you understand your valuation. But what's more important, it really isn't, I mean, it's great to figure out what your business is worth. We all want to know that. But it will also allow you to see sort of hundreds of other businesses in your sector and what you can do with key performance indicators, change your debt level or increase this or that to increase the value of your business, which, you know, kind of is the goal. And so, let's see how much time I've got. So, really the big question on this is this valuation credible? And I think with what these guys have put together, it's more credible than the way it's currently being done. I'd like to, just want to make sure I covered. Yeah, good. If we do a valuation, what are some things that might be uncovered that would be sales opportunities for people in this room? Or what would be one example?
Business continuation.
The lack of business continuation planning. Because, wow, we got a business worth $4 million, we had no idea. If you know the value of your business, are you more likely to try to protect it? Yeah. What would be another opportunity that would be uncovered as a result of doing valuation?
Our firms always use FD transitions to execute business valuations for ourselves.
Yep.
And one of the great things about doing that is that you learn what elements contribute to enterprise value. And as you were referring to before, it's an opportunity to be coached as to what enhances the value of your business and to pursue that activity that will grow that value.
Yeah, I completely agree. What would be an example of an opportunity for product sales that would be uncovered as a result of doing that? That you've experienced?
Well, I mean, as entrepreneurs and business owners, we make a mistake of not valuing our business and focusing only on the income that we were taking out of it, not what we were building underneath the income. So our non-business spouses, as an example, all they look at is, you know, what's the paycheck? What are you bringing home? You're busting your tail. What are you bringing home?
Right.
And what was actually growing in terms of business value was invisible until we started to value what we were actually doing and what we were actually building for the future. And so you can help to bring that same kind of awareness then to other business owners who face the same issues.
Please.
I would imagine that if you identify certain areas that can be grown and certain employees are responsible or important to that growth piece, that you can say, look, this is really important, you need this person, you should be providing executive comp, key management, stuff like that, and because they're going to be important to growing the value of the firm.
Yeah, that's such a, I totally agree with that. The comment was, you know, it's one thing if you got 150,000 or 200,000 a year coming out of a business as the owner, but if you know the business is worth $3 million, you start to look at your key people a little differently because they might walk across the street to the dealership across the street, and that might be bad. So all of a sudden, there's all kinds of opportunities to provide benefit plans for key people. The stakes become much more apparent, I think. Obviously, the whole buy-sell issue is huge. Disability income opportunity. Let's believe it.
I think it goes beyond what you're saying, because when you sell a business, you leave. By being able to have a management team and group of people stay and take over running that business for the acquirer, you can get more money for the value of that business.
Well, one of the questions in the observation was, if the owner is crucial to the business, that's really bad for valuation. And one of the questions in there is, what happens to the business if the owner, how much are sales impacted? And if sales are impacted in a major way, it plummets the value. So it's a great point. One of the things this shows is if a business is completely reliant on, or largely reliant on one person, they're really hurting themselves in terms of what they're trying to create. They're really depressing the value of that company. And so it's a way to try to solve that problem.
Point to this.
Please.
People that are not in the assets under management business don't have recurring revenue. And part of what we're talking about to get the value of your business up is to have other sources like this or some of the other tools that InsMark or other organizations can have for you. You'll hear about it later, tomorrow.
Here, agreed. Here's another. Can you do a proper wealthy and wise wealth planning analysis if you don't know the client's business value? No, can't do it. Have to have that piece of information. Is it easier to get information for the wealthy and wise wealth planning if you start with this?
Yes.
You bet. Yes.
I think just adding some credibility to the value of the business through this formula. I mean, if this is the biggest asset in their estate, and you're no longer playing a guessing game, is it worth $2 million, is it $3 million, is it $4 million? No, I don't want to spend 10 to 15 grand on business valuation. It just solidifies, I think gives us all credibility, because they can't play games with the valuation. They can disagree with it, but I think it gives us a lot more credibility if we have a formula to use.
The observation is this gives the planner a lot more credibility. At the very beginning of this, I don't know the individual's name. At the very beginning of the symposium, he came up and he was talking to Bob, and he said, "What business are we in?" Right? We're in the advice business. He's so right. He's right as rain. This helps you be in the advice business in a major way that then makes everything else you do more valuable and easier to recommend to that client. And it also is a huge way to get that client, especially if you're providing it as part of your overall service, which is my recommendation, if that client then talks to their friends who own businesses about getting this same, because they don't know how to get this right now. Business owners do not know this. So if they know that this is now an affordable platform, I would tell my friends that have businesses, small businesses, about this if you were my planner and you said, yeah, we will provide this if you have other friends that own businesses. Absolutely. Because it's so valuable. I'm sorry, I missed a question.
I'd just like to relate a story if I could.
Please.
And I apologize for hijacking part of this.
Not at all.
My name's Greg James. I used to run the business marketing area at Mutual New York a long time ago when it was still around. And we had a business valuation program, a little simple one that we built. But we created a marketing program around this. What I want to pass on, I don't know how many people here run a closed book of business. They don't need any more prospects to talk to. Can I see the hands of people that don't need any more business owners to talk to? All right. So assuming we all need people to talk to, here's what I want you to think about. We conducted the most successful business owner lead generation program, generating 1,000 leads a month nationwide, and just for the handful of people that we had participating in this program. The way we did it was we put together a mailer. Now think email, think different ways of doing this now, but at the time it was a mailer. And you open the front of it, it says, how much is your business worth? And you open it up and it says, depends on who's asking and when. The IRS at estate tax time, liquidation value, what you think it's worth, what you'll take for it, what a buyer thinks it's worth, what they'll offer for it. This whole spectrum of valuations. And we said, for a complimentary business valuation, guideline business valuation, we called it, you tear off a card, mail it in. So surprising number of hits. Surprising number. I mean, and we know what direct mail response rates were. It was surprisingly good. And so, but we put together a whole program where we didn't have agents running in saying, well, here's your, I'm going to do your business valuation, and I'm going to sell you some insurance, I'm going to buy sell, estate planning. The whole deal was, you go in as a method of introduction. You go in, hi, my name's Greg James. Listen, you may not need what I have to talk about today. You may need it 2 years from now, 3 years from now, next year, I don't know. What I'm going to do is I'm going to provide this service for you, a valuable tool for you, and as a method of introduction. And if you need me at some point in the future, you now know who to call, and I've provided a service for you. And you sit down and you go through the business valuation. Now, what's really happening is you spend 3 to 4 appointments collecting the data. Me personally, I wouldn't have been a business owner entering this person. I heard somebody grumbling back here about they wouldn't know what an EBITDA was from their elbow. And it's, so I use this as an opportunity to collect the information. Collect I'm going to come by, you show them a sample of the report, this is what I'm going to produce for you, Bradstreet, you know the cost. Now somebody might say, holy cow, that's based on the price, a $200 lead. Yeah, it's only $200 if somebody agrees to the appointment and you're sitting down with them and they're agreeing to give you the balance sheets and up to that point, all you've paid is the marketing costs. So if somebody's agreed to give you the data and you're going back and you're sitting in the computer or your paraplanner is or whomever it is, they're sitting in the computer and then you pay the $200, I'll buy those all day, So now you're sitting down. What's happened is you've got 3 or 4 appointments over that period of time. You're collecting the data, you're going back for updates, and then you come back, you sit down, and what's happening? Do you know this person now? Do you know about the fish on the wall? Do you know about the picture on their desk? Do you know about, where they've been, how their business runs? Do you know their numbers? So what's happened is you've built a rapport over providing a service. You come back after the 3rd appointment or whatever it is, and you're delivering this thing. Now you ask them about their buy-sell funding, or is their buy-sell in place. Now you ask them about their estate plan. Are they going to talk to you now? Every one of you is here because you're rapport builders. Every one. This is what you do for a living. You garner trust. So after you've sat with them for 4 appointments or 3 appointments and provided a valuable and worthwhile service, much better than a piece of crap I used to send out because it was a business valuation using formulas that I stole from several other software companies, and we built a spreadsheet and then ultimately turned it into code. This is, vetted. This has got teeth. So you're providing a real valuation. I heard somebody mention FT. You got $1,200 a pop. And what did you say the number was?
Well, if you buy them one at a time, the promo code is InsMark, so it's easy to remember. If you buy them one at a time, at BizEquity.com, it's $365. At the InsMark Business Valuator, which is our private label of that, you have the 5% discount, so it's $350. But if you spend $3,000, you get a bulk price of $20, which means they're $150 a piece at $3,000.
You get $150 qualified lead where they gave you documents.
Well, and let me comment on what you're saying, because I haven't even talked about going direct marketing to generate leads. He's completely right. All I'm saying is you've got to go to your current business clients and get them engaged in this way, or someone else will, and you risk losing them. In addition to that, those existing business clients are going to be your best sources for new clients because direct marketing is so hard right now. So, set all that aside, he is absolutely right. There is also a huge opportunity to use this as direct lead generation with people that don't know you. I completely agree. But just if it was a way to farm your existing book and generate credible referred leads from that existing book, it's a monster. Go ahead.
As a referral source, by the way, was another follow-on piece to this program. From a referral perspective, getting clients to say, look, I'm gonna do this valuation for your friends and other people in the business as a method of introduction. They go, yeah, I'd like for them. I bet you they'd love to have one of those. And then so the referrals were much easier. It was, earlier on we had our honor club, your top club or president's council. But we had one of the top producers stand up there and talk about this being the best lead generation program he'd ever done, and how he generated 20% additional business that year from brand new people as a result of using business valuation as a value-added method of getting into business.
Yeah.
And
so
the price is outrageous.
thank you for those comments.
And I just met him yesterday, so
No.
I'm really excited about it.
If any of you have any questions about this program, BizEquity has their booth in the exhibit room, and I will also be here. I've enjoyed talking with you the last couple of days, and have a good rest of the show.